You know, we've been talking about this for several years, but a lot, especially lately. People, including some of the biggest names in the business, are finally beginning to catch on. Rates up, markets down. Rates down, markets up. Today's markets are liquidity driven, and the sooner investors and traders understand this, the faster they can get down to the business of making money. Here's my playbook. 1. Stock futures rebound as 10-year Treasuries retreat. No kidding. Chairman Powell spooked markets yesterday when he testified that inflation looms larger and longer than anticipated. Excuse me for being blunt, but no boop. Seems to me that the question everybody ought to be asking is why he took so long to come to this conclusion and why the Fed's models are so desperately broken. Megatech and growth names benefiting from lower rates and, of course, more concentrated liquidity-driven trading will come roaring back. Today, anyway. You know what to do. 2. The last time we got prepared for this, it cost us $100 million. That's what CEO Jamie Dimon said yesterday when he warned that a U.S. default on outstanding debt would have catastrophic consequences and that J.P. Morgan, the bank he runs, was running simulations to prepare for that. I agree. Dimon is the smartest guy on Wall Street, which is why you want to pay very, very, very close attention to what he says. Come to think of it, I think you should actually pay more attention to what Jamie Dimon says than Chairman Powell or even Janet Yellen at this point. Dimon understands real money, neither Powell nor Yellen do. 3. Is this thing the best dog exerciser ever or a real home security device? Amazon just announced a suite of hardware products ranging from serious Fitbit competitors, Fire TVs, even a couple new Echoes, and a robotic Alexa. But the real showstopper for me was the flying patrol drone. It looks like a small quadcopter and is intended to fly along pre-programmed flight paths to patrol the house when you're away. I can only wonder. Bryce, our Dutch Shepherd, is going to have a field day, and our favorite contractors are already on standby because they'll have an annuity repairing all the wall damage when he takes that thing down. 4. Oil rally is a long way from over. Brent recently topped $80 a barrel, and the oil rally is a long way from over, to my way of thinking. Companies are less willing to add drilling capacity given the Biden administration's energy policies and the desire to make higher margins. I think ConocoPhillips, which just purchased a slew of Texas oil assets from Royal Dutch Shell, is a great place to start. It pays nearly 3% yield. That said, I like another major oil integrated player even better. It has bigger reserves, a better breakthrough energy portfolio, and pays nearly double the dividend. You can get the stock now if you're a member of One Bar Ahead, and of course, sign up here. 5. Crazy desperate to cash in on the IPO market. This has got to be the craziest IPO story I've heard in a long time. Aussie Media co-founder Samir Rao allegedly impersonated Alex Piper, a YouTube executive, during fundraising talks with Goldman Sachs. The FBI is investigating, and not surprisingly, Goldman has passed on the deal. Bottom line, many people think they can't make it in the markets because they're run by exceptional people. Not true. The markets are run by people who see profit potential exceptionally. My job is simply to help you do that. Thanks for reading along, and thanks for listening and for making 5 with Fitz a great place to be. As always, get out there, make it a great day. You got this. I'll see you next time. Thank you for watching today's Morning 5 with Fitz. Click subscribe to get daily market notes right here on YouTube, or sign up for the email versions at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and more.